All right, guys, welcome to another episode of the Solve2Evolve Podcast. Today, we've got a special episode. It's the budget episode. So last night, as of today, or as of this recording, Jim Chalmers delivered his third budget as Treasurer of Australia. And I guess we just wanted to chat through high level and give our opinions on what matters most to our audience. So to give a summary of the budget, I think it's best that I defer here to Bloxy, because his view, or John and I agree with his view of the budget. So, Frisk, can you tell us what you think about yesterday's budget?
Thanks for the intro, Phil. Yeah, so as previously a little bit discussed, I think that for us as tax and accounting people, this budget's probably best described as a little bit boring. And the reason for that is because a lot of the big changes that will affect the economy, so on an economy-wide change, on a client-by-client individual basis, will be honestly a little bit mundane. So if you're handing out $300 to every household and small business, or $325 to small businesses across the whole economy, that's a lot of money. But for your average small business, for your average household, $300 on the massive increase that has already occurred with power prices is really not all that significant.
Yeah, it doesn't do much at all to the household or to small businesses that have, I guess, suffered through the hard times the past 12 to 18 months.
I'd agree with that, Phil. So there's a lot of little changes like that on an economy-wide kind of perspective are significant, but for our audience may not be as earth-shattering as what they're used to, because the past few years have been kind of dominated by COVID discussion in the tax law context. And I think now I perceive that the bigger tax law changes, the biggest one by far that is being implemented in this budget and start kicking in from 1 July, is the stage 3 tax cuts, have already been mediated and covered to death well before being announced last night, or confirmed last night. So that's kind of my perspective on this one. And it doesn't just apply to the stage 3 tax cuts, which will make it cheaper for people to live because you'll be able to keep more money in your pocket. That is true. But how much money you keep in your pocket and whether or not you're even going to notice it is kind of up for debate. It depends on what income bracket you're in and how closely you watch money. But it's not an earth-shattering thing. It's something that you should be aware of when tax planning for year end. But again, it's already been out there in the world for a long time.
Yeah, it's not new news basically when it comes to this budget. And I think, the tax cut itself probably is the biggest change for individuals. But, on the flip side of it, they've already been affected by the 12 plus rate rises that obviously has severely impacted their family budget. So when you do bring in the stage 3 tax cuts plus a $300 energy relief for the whole year, that doesn't do much to what has already been done by the RBA. And so, once again, I would agree it's boring. It doesn't really do much for the taxpayers. I know there's a lot of people probably angry about it, that the Albanese government has promised quite a lot, but delivered nothing. But yes, so.
And another thing that has affected individual taxpayers pretty heavily, John, I mentioned it before, was the bracket creep.
Yeah, so there was a graph. So when we're talking about bracket creep, what we're saying is, so your income has been going up in dollar terms, which is, to take account of inflation and growing costs. But the tax brackets haven't moved for the past 5-6 years. So there's actually a graph in the budget that shows how much of the increase in personal tax has come about by bracket creep. And it was almost a third, I think, in the past 2 years. So this tax cut now is, I think, effectively just reversing that to reduce the impact of bracket creep on basically the government taking more personal tax.
And almost certainly not all of that bracket creep would be addressed by the tax cut.
Yeah, so I mean, obviously for the audience out there, bracket creep, over time when you are working every year, you're probably going to see a pay rise or increase in your income, and that means that your tax increases as the years go on. And so what Jono is saying here is that the tax cut now is reversing that creep itself. So there's really not when you combine all those changes together over the last 5 years, including this one that's coming up, there's really no saving.
Yep.
So when you take all of those factors into account, the bracket creep that they're trying to offset by increasing the level at which the top marginal bracket kicks in from 180 to 190, and increasing also the level where Medicare levy kicks in for singles and families, when you kind of cross-check that against the invisible inflation tax that is rife in the economy at the moment, I come back to my original summation of this budget as one that is pretty boring
and does nothing really for our awful.
Does very little in real terms for the taxpayers of this country.
Yeah. So I mean, look, just to summarize the points that we just spoke about, $300 energy relief for each household. I think you get that over $75 every quarter, I believe. That comes off your energy bill. That's not going to do too much. Small businesses are entitled to $325 for the year. Once again, that's not going to do too much at all. The stage 3 tax cuts that take effect from 1 July, you will see more money in your back pocket if you are an employee, just because you will have more net pay per pay period. But overall, when you factor in tax creep the last 4 or 5 years, it really doesn't do much at all. Now, Jono, do you have any takeaways from this budget? What are your key points?
Yeah, Phil, I focused a bit more on the SME businesses, and there's a little bit more, not as much in the budget, but there's a little bit there to be positive about. And the first one is, it's good to see the extension of the instant asset write-off. So this was the one that was going to end on 30 June 2024 for purchasing capital assets up to 20,000 if you're a small business with less than 10 million in revenue. So that's been extended for another 12 months. So I think that's good news. It takes away that decision of, will I get a tax deduction if I'm outlaying more on those larger assets for small business, and that that allows you to invest tax efficiently. Of course, you shouldn't just invest to get a tax write-off. You should put it in your budget and make sure that you've planned that capital expenditure.
I had a client today, actually, he said, what can I do to save taxes? What should I be spending money on? And I said to him, well, do you actually need to spend money on your business just to save tax? Because, that $20,000 instant asset write-off deduction is not necessarily money back, but, at the company tax rate of 25%, you save the $5,000, in this particular year now.
Yeah.
And so, I think you're right, Jono. You got to think about, you got to have a mindset if you are running a business, not to think, I need to spend X and Y to save on tax, because, that's not the right way to think about things when you're trying to grow your business, but rather, budget and plan for it. If you actually need it, let's, invest in that. But otherwise, hold on to your money and, put that to better use than to think about saving tax.
Yeah, that's right.
Absolutely.
You wouldn't do anything. I mean, putting money into a business or investing it, you wouldn't do anything to generate a tax loss. The tax impact of making an investment should not be the first consideration that you make. Far from it.
Mm.
Whether or not you invest money into your business or into any investment, individually or through other entities, the question is whether or not it's a smart thing to do, whether or not it's required. And if it's not, don't do it.
Yeah. Good advice.
Well, look, I think there's obviously people that are caught up about, not paying tax and buying X, Y, and Z to not pay it. But, that, as you say, it is the wrong thing to do. And I know I see it quite a lot. I'm sure you guys see a lot too, where clients want to borrow money and purchase an investment property or a property, but then they've got no income because they've reduced their tax, and then the banks don't allow them to borrow.
That's right, Phil. Nobody wants income until they need a loan, and then it's our problem.
Yeah, that's right.
We see this scenario all the time. So
Yeah, so either way, we lose to the big banks or we lose to the government. Who do you want to lose to, really?
That comment is true, but a way that I would say of maybe not usurping it, but a way of benefiting from that realization is, for example, to hold shares in your mortgagee. So if you have a mortgage with Bank A, also holding shares of the issued equity of that bank company on the ASX is a way to indirectly benefit from increasing interest rates, because banks become more profitable as interest rates go up, assuming that their maturity structures are managed pretty well, which they all are. They're all of the big four are managed pretty well. And so as interest rates go up, you have to pay more. But then on the other side of the ledger, you or your super fund will be receiving more dividends, cash, and franking credits because those profits are increasing. So
it's a good way to think about it.
Invest, you must.
Yeah.
You have to. People, institutions, businesses have to invest.
Yes.
And if you can invest in a way that benefits you more, then you should do that. So, for example, mortgagors should have shares in their mortgagees.
No,
and going back to small business budget measures, there's not too much else on a tax changes point of view, but there is some spending in there for the payment times reporting scheme, which is a new thing to allow or to hold larger businesses and government to account on how quickly they pay their small business suppliers.
Mm-hmm.
So hopefully that will encourage, a bit faster payment times for small businesses. And there's also funding for some other support measures like the new access for mental health support. So, we all need to be resilient when we're running our small business, and there's some support out there from the government.
Is that specifically for small business
owners?
People? Okay.
Yep.
Yeah, that's very true, especially the last 12 months or so. I know everyone has probably gone through a hard time or tough times, and, I serve quite a lot of business clients that are going through that. I think sometimes you just need to ask for help, and this is where the government is, putting their hand up to say, hey, we hear you, and this is how we're going to try and help. So good on Jim Chalmers for that. Now, is there anything else?
There are some other minor things around the edge, Phil. There's a new initiative whereby paid parental leave is getting super paid on top of it now. I think that's largely
a big change.
It is a big change, and it's a big change economy-wide.
Yes.
But again, individually,
yes,
it's not an earth-shattering change. There's another one of these changes that are occurring that really, would you make a planning decision based on getting super on paid parental leave now? Is it
anyways?
That's right. That's right. So, but that's designed to equalise the situation between, not equalise, but it's another gender pay gap. Gender pay gap.
Which makes sense. And look, just to be clear to the audience, this is for government-funded paid parental leave, not parental paid leave from your employer.
That would be separate.
That would be separate and up to the employer. So that's for government paid parental leave. And I believe that's going to happen 1 July 2026 or 2025. I can't remember. It's not going to happen this financial year, and it will be at 12%. So I think it might be at least 2 years away. So once again, good change, big change for the wider economy, but we're not going to feel any of that right now. And it doesn't really help with the cost of living crisis that everyone's kind of facing, or the majority is facing at this point.
The other one I'd mention, and it's not a budget measure, but the increase in the super guarantee rate. It's going up to 11.5%
from 1 July.
Businesses from 1 July. That's something to be aware of for your payroll and your forecasting.
Yeah, so obviously that's bad news for employers. You've got to fork out more cash, especially for the employees that you have. But I guess the other thing to think, and good news for employees, but for the employees that's on a package, a salary package. So for example, you might be on $100,000 including super. Well, that's just going to mean that you're going to have less money in your back pocket, because as the statutory SG rate, super guarantee rate goes up, your net pay goes down. So just be careful of that and try and negotiate that, or your salary package to be always, your gross salary plus super. That way, increases in statutory rates don't affect your net pay.
There are two other areas that are important. And they both deal with different areas of increased expenditure from the federal government on compliance. So the first one is extending the personal income tax compliance program. So over the past few years, there's been a lot of money invested in teams inside the ATO to physically eyeball anomalies that are identified by the lodgement softwares that they run. And probably the two biggest areas that you should be focused on as either an individual or a business owner is that investment property interest and generally investment property deductions is being targeted by these teams, and also work-related deductions that are being overclaimed. Those two areas, so employment-related deductions, which are all listed in the D section of the individual tax return, and anyone who has investment properties should be careful, particularly if they're lodging themselves. They should be very careful. It probably will get reviewed at some point because it's complex. And more money, I believe it's like 20 plus million is being spent on that. That doesn't sound like a lot, but $20 million can hire a lot of people or pay for a lot more systems at the ATO to analyze a lot more data. There's huge big data, and nobody knows exactly how their algorithms and their data is filtered or how it works, but it's all analytics now. So although the investment sounds small, maybe at $30 million-ish, that can have a huge impact on the ATO's ability to analyze things like employment deductions and rental property.
Yeah, I guess it goes into
deduction.
benchmarking. Yeah,
It does. It's much more active than that.
I think the ATO, in the budget papers, they talk about short-term rental deductions as well. So they're probably targeting things like, if you're running an Airbnb, those sorts of deductions relating to that is what they seem to be targeting and picking up on.
And their analytics every year, every day, they're getting better. Their computer systems are getting more powerful. They now can nail it down to your occupation listing and your street address, what you should be earning, what the computer systems anticipate you will be returning and deducting. And if you fall too far outside of the mean, if you have too many standard deviations away from the mean, you can expect to be contacted by the ATO. That's more likely now.
Yeah. Yes.
The other area of increased expenditure is on foreign resident capital gains tax. Now, this is one that is a real sleeper. People don't realise often that when they leave Australia and or re-enter, that they're not always, but there can be tax consequences of that. Now, in this budget, they're looking to strengthen again the foreign resident capital gains tax enforcements. Now, that is kind of a scary one, because not scary, but it's a little bit more serious when they pick someone up, because there's really no votes to win with a foreign resident. If you have, somebody, and the state guys do the same thing, particularly with property investment. Like if you are a non-resident and you hold Australian land, you're going to get whacked hard. And a lot of people think that they can hide away from it or not declare, not disclose, sell the property and hopefully walk away. It's really hard to do. And so in this budget now, another tens of millions of dollars, however many, is being invested to beef up the foreign resident capital gains tax compliance program. So anybody who has international ambitions or who has international contacts, spends a bit of time overseas, should be aware of the implications of leaving and or re-entering Australia.
I'd add to that, could also impact buyers of property. So anyone who's investing in property in Australia, whether that's a self-managed super fund or you as an individual, there are withholding rules that you need to, before you settle on a property, you need to get what's called a withholding tax clearance certificate. And in the mid-year budget, so not in this most recent one, there was a change to increase that withholding tax rate for foreign residents from 12.5% to 15%. And it's also removed the threshold. So there used to be a threshold, only properties are more than $750,000 where you'd have to have this withholding tax, but now there's no threshold. So at every property, you'll need to have a clearance certificate. And I mentioned it also for SMSFs, any SMSF buying property, especially where it might be a related party deal. You're investing in commercial property, so your business real property, which we've spoken about before. That's one where you'll have to be wary of this and make sure you've got your clearance certificates, because there's changes coming for foreign residents and they're going to be paying a lot more tax on property transactions in Australia. But it's the buyer's obligation to take care of that if they don't receive a clearance certificate. So, I mean, 12.5% to 15% doesn't sound like much, but on a 700 grand property, that's 100 grand, 105 grand, that you could be required to pay to the ATO instead of paying to your vendor.
Yeah, very cool.
That's an interesting.
Yeah. Excellent. I guess from my point of view, I did see NDIS, there was a budget breakdown on that. So obviously we've seen all the news about the cowboys in the NDIS industry. And so the government have announced that they will, commit almost $500 million to combat that. And so I guess the cowboys that are in that industry, please beware. Obviously it makes it a lot tougher for those that are actually doing the right thing, because now there's more compliance that's involved. But ultimately, NDIS is the third biggest budget spend in Australia. And so, we do need to look after that, because ultimately it is the taxpayers' money that we're spending here, mine, yours. And we want to make sure that it's actually going to the right people and places. So that's a big one.
Just the scale of the NDIS is mind-blowing.
Yeah, it's massive.
The amount of money that is being spent on it is so massive. I think I had one projection that was on track to be bigger than the military if it keeps going
the way it's
growing,
going,
the way that it's going, which is, well, I haven't dedicated that much kind of background thinking to it, but
no, I haven't either. But is there that many disabled persons out there to warrant the budget? I know we need it, but I think a lot of it probably goes or is directed towards housing, which is
support.
Housing support, because I have a few clients in the NDIS area, especially for the supported living. There are specific requirements for the housing for them to actually live there. But once again, as you say, it is a big budget spend, and it's not looking like it's going to slow down anytime soon.
And Phil, what are the proposed changes with that crackdown? What does that mean, really?
Yeah, so almost half of that $214 million is to combat fraud. So there's a lot of people that will enter into the industry and pretend that they're a support worker, for example, and start claiming funds when they're not really providing the particular service. So there's a lot of that happening. So really that's where the bulk of the money is going. I'd like to see, I don't have the specifics, but I want to get into more detail as to what they are looking to spend or what they're looking to do with that $500 million. But once again, it is a big spend compared to the rest of the budget.
So probably one other main theme from the budget is how much money is being spent on housing. It's not just specific to the Northern Territory, although we focused on Lingiari as it probably should be. But another trend here is massive expenditure on housing. So it's not only from the supply, it is primarily from the supply side. So not only are they trying to build houses, but they want to subsidise. Well, they are subsidising and paying for people to get educated and trained in the construction sector. So, I mean, I think that's probably good news for any builder clients, any tradesman clients, or any business owner clients might have kids who are thinking about doing a trade or entering into the construction industry. It is going to get cheaper to train up in that space, and there will be ongoing governmental demand for people with those skill sets into the future. I mean, there's significant expenditure.
I think it's a good point, just because we've seen, especially since COVID, a shortage in a lot of industries, and construction is a big one. So the fact that they are handing out fee-free TAFE courses in the construction industry, I think it's $10,000 per apprentice they would receive. That's a great incentive for those to get back into or for that industry to, increase the supply of skilled workers.
It is, but I mean, it's not all roses from the government. I mean, they have caused a lot of this problem by opening the gates basically to a record number of immigrants, which is causing huge amounts of problems, not only with workers, but also with students. So there's now rules that are coming into place that educational institutions that offer international fee-paying students places at their institution need to have a certain amount of student accommodation built before they can do that. I haven't gone into the detail of it, but I mean, this is all has been caused by a huge amount of net migration into the country. Yeah. So it's necessary, and it's going to continue.
And I think that's a good point because, the international students, they have to pay their fees up front. So for universities, come in, because that's more revenue for them right then and there. And the fact that they haven't been accountable for then, even then, I don't know if they should have been accountable for the housing of those students, but,
well, now they are.
No one was, and now they are. I think that's a good thing to curb, the housing issue that we currently have, and hopefully over time, which I don't think will happen, house prices would come down.
Now, education is a major export for Australia, so it's a welcome reform. It's a welcome change that they're doing. It's too little, too late, but it's better than nothing.
Yeah. So, as we draw close to this episode, with all these changes, guys, do you think we'll see another interest rate rise? Will it stay the same and flat for the next 7 months to the end of the year, or will we see a cut finally?
It's hard to predict. Everyone seems to think it's gonna, rates are going to be cut by the end of the year, and it's kind of written into the narrative. But I find it hard to see that that's going to be the case. I'll probably be wrong in 6 months, but I feel like maybe they're going to stay on hold for maybe a little bit longer than what we think. And you should be prepared for that with your household budget and your business budget as well to be able to withstand that and continue to grow even despite what's going on with interest rates and tax rates.
Yeah, it's a good question, Phil. I'd probably argue that just based on logic at a very low, simple level where the government's handing out cash and reducing taxes so people have more money to spend, that will cause inflation to increase. Mm-hmm. And in order to combat inflation, the price of our money needs to be jacked up by the people at the Reserve Bank. So personally, I can't see inflation going down because of increased government expenditure. Yeah, that defies logic.
Despite what they say.
Despite what Jim will say, I think we'll go up. And in order to combat that, like I said, interest rates will need to either stay where they are or go higher.
Yeah.
And another thing I'd say about interest rates is that they're mean reverting. Interest rates don't follow like a market pattern, whereas the stock market drifts up over time. Interest rates revert to the mean, and they've been below the mean for a very, very long time, well over a decade. As low as nearly 0%. The cash bank bill swap rate's been near zero. So people need to be prepared for interest rates to stay high for long in order for the rate to revert to the mean, which is somewhere around 5%. So I think it's important to just talk about a really basic concept. As accountants, we deal with profit and loss statements and balance sheets. So what the federal government talks about with budget is a surplus or a deficit. That's an operating profit or an operating loss on your P&L. In accountant speak.
On business speak, yeah.
Yep. So for us, like when we talk about the profit and loss, we say profit or loss. The government says surplus or deficit. Mm-hmm. That's what they're talking about. And that's different from the balance sheet of the federal government. And they talk about a whole things that confuse you. They talk about terms of trade, talk about trade weighted index. Simplify it back to your business. So the profit and loss and the balance sheet, that's how you have to think about a federal budget. And that hopefully will help you to understand it a bit better.
Thanks, Floxy. I would probably agree with you there. I think the budget here, there's quite a lot of spending to appease a lot of the population. And ideally, I think Jim is trying to get more votes. I suspect there will be a early election that will be announced, and this is a way for him to get those votes to be re-elected. Ultimately, this budget is a surplus for this year, but for the next 3-5 years, I believe it's forecasted to be a heavy deficit. So I don't think this is going to bode well for us in the future. I suspect we'll be either paying more taxes or more money will be printed. But I'll leave that with you guys there. So thank you guys for joining us on another episode of Solve2Evolve. If you liked what you heard, please give us a follow or connect with us on podcast@solveaccounting.com.au.